We've been looking into UK retail investors' attitudes into ESG investing. We wanted to understand the extent to which ESG factors are driving investment decision making among UK retail fund investors, particularly in the younger segment. And the survey was completed at the end of April by more than 1,500 UK retail fund investors. One of the first questions that we wanted to ask was whether ESG considerations affect the retail investors' choice of investments. And overall, 58% told us that all or part of their portfolio considered ESG issues. But when we dug into the numbers a little bit further, there were some quite surprising findings. Among the 55 plus demographic, this figure was less than a third, but it almost doubles to 67% for the 35 to 54-year-olds, and then goes all the way up to 78% of the youngest investors, the 18 to 34-year-olds, who say that ESG affects their choice of investments.
Is that there are more younger investors now than there have ever been in the past. So one thing I saw over 2020, which I thought was particularly striking, is the number of new first-time investors that came to the market. So at the end of the year, 1 in 10 out of every retail investor had been an investor for 12 months or less. So we've seen a sort of fundamental growth in the number of investment accounts. There are more than 7 million DIY investment accounts in the UK now, and a large kind of chunk of that growth has come from younger investors. So actually, there's more of them, and they're a more important cohort than they've ever been before. It's very different to 10 years ago when the DIY investor was a sort of 60-year-old Range Rover driving golfer from Surrey. The backdrop has fundamentally and changed and will continue to change, but there's still a sort of barrage of information coming out our way in 30-page PDF documents, which is based on what institutional investors might want to know. And no one, I don't think, spends enough time thinking about, well, what is it our retail investors really want to know? What are the key facts? Let's start and present those, and how might we present it in a more engaging format?
Because what our survey suggests to us is that, younger investors are digesting information specifically about ESG very differently to, their older counterparts. So they're using YouTube and Twitter, which, again, our survey bears out that the other age categories just aren't really considering those in the same way. So, is there a sort of short-term fix that asset managers can do to make sure that they are reaching those investors at this point? Or, is it not about the channels at all? Is it more sort of about the content and about the way they're actually communicating around ESG and what it should mean to their audience?
I think it is about the channels, because people don't move from channel to channel based on what they want to find out about. They just are, in ecosystems, or they're not, and they will. I'm not alone. Anyone on the call with kids will know if they want to find something out, they go straight to YouTube. They wouldn't go to where we go to. Even if they go to Wikipedia, they're very skeptical about it, much more skeptical than I am. So of course we have to be where our target audience is. I think the challenge has always been, I remember back to when sort of Twitter came out, and some poor execs had obviously been told that they had to go on Twitter. And it was sometimes it was a bit, as my children would say, they're in my mind at the moment, cringe, because you've got to be the single biggest thing about social media, I think, is authenticity, and particularly a younger audience. They're super skeptical, and they can smell inauthenticity a mile off. And so it's not about high production values and sort of glossy backdrops. It's that authenticity. So I think the challenge for the asset managers is, of course, you've got to be where your target audience is. That's a bit of a no-brainer. But who have you got in your gang of people who can do that and who can carry it off and who can look authentic. And if you don't have those people in-house, then how can you partner with people, or how can you find people who you trust to have the sort of responsible conversations in those environments who will look authentic as well?
Yeah, I completely agree with that. I mean, last summer, the first lockdown, everything changed around video. And the consumption of video among the general populace went up considerably. I think there's some scary stat that on average we were watching 9 videos on YouTube per day. So goodness knows what some people were digesting. And so and it was across all ages. It wasn't a young people's thing. It's, video is where it's at. Our research among younger investors shows video is how they want to be educated, how they want to digest information. And of course, that brings its own challenges, because there is the 1-minuter that you can use, that Holly's mentioned, to make, a simple point with your 3 bullet points and get simple messages across. And then there's the, how do you do a 5-10 minuter and keep people's attention.
And I just looked last week at Columbia Threadneedle's report, and they've created both a PDF, the sort of more traditional model, but they've also created a digital model for people who prefer to consume it that way. And it's just very interesting, because on one sort of page of a site, I haven't looked at it on mobile actually, but on a desktop, on one page, there's an awful lot of information. It's very engaging and it's very intuitive, and it's still quite unusual to see content like that. And so, I think they're on a learning curve. It could probably be enhanced a bit, but it was great. It was really sort of nice to see, and it was engaging, and it just looked different and it stood out. And I think particularly on the topic of ESG, which, let's face it, is great. We all love it because finally we're interesting. We've got something to talk to people about that they actually care about. And so digital assets lend themselves incredibly well to starting a conversation with people. And you start a conversation, I think, with a couple of headline facts or sort of salient points. And, to that, and I know fossil fuels, we could sort of discuss what we think people's approach to those should be ad infinitum. But something I find really interesting is what many people who write to us want to know about. And we also get a lot of comms from people who have bought a sustainable X, Y, or Z and then have found out it's got some exposure to fossil fuels, and they feel sort of outraged and let down. If that's what people are seeking, then that's the information we should be providing. And I think it's very hard, because we might think that they shouldn't be seeking that information and that it's more nuanced, and our instinct is to sort of go in and explain. But if that's what people want to know, then I could sort of say now, I could list sort of 4 or 5 things that pretty much everyone who comes to us and talks about this, what they want to know, what their questions are. And it's very hard to get that information, and you'll quite often be sent to the website to go through a sustainability report or to read through a fact sheet, and you have to kind of do a lot of the legwork yourself. Whereas to list the 4 or 5 salient points, to me, seems like a sort of very sensible, immediate approach. But people don't do that because they want people to listen to their story, which takes about 20 minutes to tell. They're also more likely to say that they're put off by the jargon and by all the BS. So, I mentioned at the beginning there are now more than 7 million DIY investment accounts in the UK, which is hugely exciting. So that's at an all-time high, but actually confidence levels about knowing what to do are at an all-time low, because if you think about what's going on in the world, right? No surprises that people are going, I'm not really sure what the future holds. I don't feel confident about this. I need some help. I need someone to tell me what to do. So those lower confidence levels mean that more than ever, everyone, and me too, right? We are all using too much jargon still. We are all assuming knowledge levels and competence levels are higher than they are. And we need to really strip it back and focus on the language.
The question was about whether millennial investors are going to be more activist when it comes to having, involvement in their investments and being vocal when it comes to companies doing things that they don't like, or indeed fund managers doing things that they disagree with, spotting something on the website that sort of directly contrasts something they've read in their marketing material, for example, or that they're doing in a fund. And the question is really, what can asset managers do to prepare for greater levels of activism from retail investors?
Well, we're trying to encourage retail investors to become more engaged with their investments. That's a key campaign for us, and to vote their shares, to get to ask us questions so that we can feed that into fund manager interviews that we do. And I think we're making progress in that. So I would agree that it is coming. You are going to see a more active, more retail-based, presumably, as Holly says, it comes with the confidence, to ask the right questions, or to have the confidence to ask what they thought were stupid questions that they couldn't ask, which I think for women is a bit of a barrier. We're trying to encourage our customers to vote on their shares, so including investment trusts as well, and we've had quite a bit of success with that. We started at the beginning of this year by writing to all customers. It's a free service on Interactive Investor, so it's not something they have to pay for. It's not something we're going to benefit from commercially, but we feel that they should get engaged and get more active. And we've seen more uptake since January, so the levels of engagement are going up. The number of people who've signed up for the voting service have gone up. We're seeing voting on all sorts of different issues. It's not just environmental stuff, it's directors' pay, the governance side of things as well.
I think every customer base will be slightly different. Despite me wanting to believe that this will change, I think we possibly overstate it, because we know that people are apathetic, and we know that people have conflicting priorities on time. And I think, we've researched this, and we've asked people about, does this sound like a good idea? And then we gave them scenarios and put times on it. If it could be done in less than 5 minutes, would you log on? And people very quickly went, oh, yeah, well, maybe not.
People are engaged. They're engaged in all aspects of their lives. They're just not as engaged in their investments as they are, say, in their shopping or their consumer purposes. And so, and someone could be very, very educated around, their food shop and everything and products out there, and yet they haven't applied that same research to investments. And I don't think they're not capable of it. They just might find a few more barriers there in terms of jargon and accessibility, and just pointers on where to go to find out this stuff.
If you're not really interested in what your end customers think, then how can you expect to engage them in a conversation about what you're doing allegedly on their behalf?